certain times. Okay, so like I said, we've outlaid some financial priorities for you guys to keep in mind during these uncertain times. The first one we have is to preserve cash. The second one is to apply for assistance, and that one has got two pieces to it. The Paycheck Protection Plan, which is obviously the one that's grabbing all the news headlines. And then also there's the Economic Injury Disaster Loan Program, or better known as the EIDL program, that the SBA is also offering. Lastly, we wanted to encourage everybody and to be proactive with this and to really get ahead of this as much as they can. So with that being said, we're going to dive right in. So priority number one, preserving cash. Our goal for a lot of our customers, and their goal as well, has been let's get 90 days of cash on hand. I mean, with as uncertain as things are, we want to make sure that everybody's got a little bit of a cushion, because nobody knows how long this is going to last. We want to make sure that the businesses we're working with have access to some sort of liquidity if need be. So some ideas that we came up with were to work with your current creditors to lower your fixed expenses in the short term. I think what's pretty great, and what I've heard echoed from a lot of our partners that we've been working with, is just the flexibility of people and the understanding that everybody's had regarding this crisis. A lot of businesses, a lot of vendors have just been very understanding with each other on payment terms, and everyone's trying to work together to help everybody get through this. And that's something I've seen, and while it is certainly a crisis, I think that's kind of a ray of light that I've seen time and time again. So kind of want to echo that. If your business is less affected, I don't think there's any business out there that hasn't been affected. But if your business is less affected and is able to help out, I think the biggest way we're going to make it through this is by working together. And so I'd like to echo that. Another thing you can do is you can request modifications or short-term deferments on existing financing. So that could be on equipment financing, mortgages, lines of credit, vendors, working with your vendors on payment terms, and banks as well. One thing we're working with every one of our customers on is offering interest only or deferment terms, depending on what they need and what their current cash flow requires. So that will move to the next one. So priority number two is assistance, and like I said, there's two different programs that we're going to be talking about today. The first one is where I'm going to dedicate most of my time. It's certainly the most popular of the two, and what we think is it's going to be a good fit for most of the customers and clients on the phone today. So the first one is the Paycheck Protection Program. Just a little background. I'm sure a lot of you guys are already aware of what this program is, but it's a small business loan program facilitated by the SBA. Its goal is to assist small businesses in keeping their workers on their payroll during this pandemic. And basically how they incentivize you to do that is if you keep your workers on the payroll over the time period, there is a portion of that loan, up to 100% of it, that is eligible to be forgiven. Basically, how the loan amount is determined is by using your domestic payroll of employees earning less than $100,000 or up to $100,000. That's capped at $100,000 for the 2019 pay period. That changes a little bit if you're a new business or you're a seasonal business. We'll have some information on that by request if you need it. But the SBA started taking applications for this program last Friday. Again, at 2 in the morning was when they opened it up. We had actually set up shifts for our bankers to try it every 30 minutes or so, or 20 minutes or so, and 2 a.m. seemed to be the magic number, and we started inputting soon after that. So who is eligible for this business? And the answer to that is small businesses, any business employing fewer than 500 people, sole proprietors, independent contractors, and self-employed persons as well. Just an FYI, part of this is, you do have to make a good faith certification that the uncertainty of the economic conditions have made this loan request necessary in order to support ongoing operations. So while it's not anything that the bank is going to try and verify, that's tough to do, it is a requirement for eligibility to make that certification. Moving on. So, let's talk a little bit more about what the terms and what these loans specifically look like. The loan purpose of this program is to help with payroll costs first and foremost. But more so than that, it extends to employee benefits, commissions, as well as a certain percentage of the program that's can be used for operating costs. Again, the max loan amount is up to 2.5 times the borrower's average monthly payroll costs, and is not to exceed $10 million. Compensation of any employee in excess of $100,000 per year is excluded from that calculation. The interest rate is currently at 1%, and the payments are deferred for 6 months. However, the loans are going to accrue that astronomical 1% interest. There is no prepayment penalties, and the maturity of the loan is due 2 years from loan origination. I think the main part everyone is interested in is the forgiveness portion, and so eligible businesses are able to receive debt forgiveness equal to the cost of maintaining payroll continuity from February 15th to June 30th. And that is up to 100% of the loan amount. So there's no cap on that forgiveness. We're expecting the majority, if not all, the majority of those funds to be forgiven. So loan forgiveness is anticipated to be reduced with year-over-year reduction in full-time equivalent employees, and with salary reductions of more than 25% for those earning less than the prorated $33,333 during the covered period. One thing I do want to mention is that there is the two programs, that Paycheck Protection Program and the Economic Injury Disaster Loan Program from the SBA. There is no double dipping from those two programs for the same purpose. I think the SBA gave us some more clarity on what that looked like, and so you can certainly apply for both. The funds just can't be used for the same purpose. So continuing on the priority number 2, the assistance, we have the Economic Injury and Disaster Loan. And so this one, it's important to mention, is you applied for this one directly through the SBA, whereas the Paycheck Protection Program, they work with a banking partner and you apply through the bank. This one can be found on their website. The eligibility for this is very similar. It's open to small businesses and nonprofits. The loan purposes for this is working capital, payroll as well, fixed debts, and accounts payable. And the loan amount is up to $2 million. You'll work with an SBA underwriter or caseworker to determine what is qualified for. And the interest rate on these is capped at 3.75%. However, the SBA did make they wanted to make it clear that it was capped at 3.75%, and it can certainly be lower than that. The SBA is offering flexible repayments with up to a 30-year term on these loans, with the first payment not being due until 2021. How to apply is you just, like I said, it's directly through the SBA. We've got the link right on the slide right there. The current turnaround is 2 to 3 weeks plus. It's been tough to get a turnaround time out of the SBA. I think what's important to mention is a little bit of the history of this disaster loan program. This program is not new. It's been around for over 50 years. It was set up by the SBA to handle regional disasters like hurricanes and tornadoes. So as you guys can imagine, a crisis like this that's affecting the entire country, the resources have certainly been overrun. So again, I take that turnaround time with a grain of salt. They didn't want to nail down a turnaround time. They're still trying to work those out on their end. So once the SBA caseworker approves the deal, they will fund up to 20% within 10 days. And then the loan authorization will dictate the remaining conditions to fund and the timeline associated with that funding. So moving on from there. The last priority, and the one I think that is the most important, is just being proactive. And I'm sure everybody on this call is. We're all staying busy. I've seen a lot of that. So these are just some ideas that I'm sure most of you are probably already doing. But act fast. These government relief programs are first come, first serve. So don't wait. Be prepared to wait a month or longer for those funds. So keep that in mind when you're deciding when to apply. That there is likely going to be a significant lag on the availability of these funds. The other thing we're suggesting is consider all options. Talk to your financial partners, auto paychecks, Dolby, your accountants. Talk to whoever and make sure that when you're comparing these programs, you're really looking into which one fits your needs the best. And look into locally based financing and grant opportunities as well. Know how you can use it. That's part of what you're doing today is certainly part of being proactive. Listening to these webinars and reading online. There's a lot of information out there, and One thing we would recommend is be careful where you're getting that information from. Anytime you have these programs that are very large and there's a huge amount of ambiguity associated with them, you always have the ability to have some misinformation involved. So make sure you're watching those resources. I've kind of seen some funny things come from some different places, but one thing that some resources for this has been, the SBA directly has been putting some information on our website. The U.S. Chamber of Commerce has put information on their website, and then we've seen some information come out of some other organizations as well. So use some discretion when getting the information from some resources. Lastly, prepare. Get the financials in order, and do some projections for the next 6 months and stress test those projections. We think that's hugely important. Nobody knows how long this is going to continue to last, and so we've been telling everybody to get 6 months of projections or even 12 months of projections and stress test those 10, 20, and 30% to really see what the business can handle and what cash flow shortfall you might have, and keep that in the back of your head when you're applying for these programs. Double check that you have all the required documentation to avoid slowing the process. That's a huge one. We did over 250 loan applications this weekend, and the loan applications that had everything there, we were able to get those through the process very, very quickly. The ones that didn't, there was some callbacks we had to make and some stuff like that, and that slows the process down. And really, returning to the first prompt, acting fast is a huge piece of this whole puzzle. Congress has allotted a certain amount of money towards the program, and like it says, it's first come, first serve. If it runs out, we're not sure. We haven't heard whether or not they anticipate releasing any more. So keep that in mind when you're applying. Make sure you have as much information in there as possible, and make sure it's checking all those boxes that the banks are asking for when you send that information over to them. So next, I wanted to see if we could field some questions for you. I know we're a little bit shorter than what we had anticipated. I talked a little faster than I think I had. It might be the coffee I had this morning, but if there's any questions out there, we're certainly happy to field any of those right now.
There were a few questions that came in early, and Austin will go ahead and start with those.
Okay, so the first one, I'll just go ahead and read these aloud so everybody knows the question and I can answer them. So we'll read it aloud. My main question revolves around closing my business on March 17th, when Governor Polis shut down some of the non-essential businesses. My staff filed for unemployment. 10 days later, on March 27th, the President signed the CARES Act, and by that date, my staff had already been paid in full for their labor, paid their PTO, and now they are on unemployment. So do I now apply for the SBA EIDL program, first to use for rent, utilities, etc., and then apply later for the payroll protection program when it looks like the mandate is going to be lifted? I can start rehiring my staff back, reopen, and thus use those funds for my new payroll expenses. Would there even be more monies available through the payroll protection program if I wait? You must use the monies within 8 weeks, but by 6/30. Or must you use the monies within 8 weeks or by 6/30? Or do I apply now for the program and use all the monies now for rent, utilities, etc., and not all of them on payroll? Since it is the program that should be a grant forgiven, when I have hopefully rehired my staff back by 6/30. So in summary, she's asking which loans she should apply for, both of them, one of them, and are they to be used for different financial obligations and purposes? So there's a lot in there, so I'll kind of unpack that. To begin, yes, you can apply for both of them. They have to be used for separate purposes. And you can use a portion of the payroll protection funds for non-payroll expenses. That is limited to 25% of your total loan amount. So keep that in mind. If you go over that, it's nothing bad's going to happen. They're not going to come, start taking money out of your account or anything like that. But just keep in mind those funds are likely not to be forgiven if you exceed that 25%.
Hey, Austin.
Yeah.
Austin, can you give an example of some of the expenses that you can use the Payroll Protection Act on that are not payroll?
Absolutely, yeah. So operating costs in general, looking at rent payments, Utilities is another one, stuff like that. Any operating costs associated to operating the business are eligible. Transportation's another one. But again, that is limited to 25% of the max loan amount granted under that program.
So you mentioned rent, is it also mortgage payments?
Yes, yep,
All right, thank
mortgage
you.
payments, yep, as well, yep. And so I know looks like she also asked if she should apply for the EIDL program first to pay some of those rents and utilities. And you can. Again, the purpose is just they can't overlap. So if you're going to use EIDL for rents and utilities, make sure that the payroll protection program funds are only being used for payroll. So move on to the next question. This one is a little bit shorter. If I do not use all the funds in 2 months, can we just pay it back? And the answer to that question is yes. There is no prepayment penalties on these loans. And you can absolutely pay back what you don't use if you end up not using it for payroll. The next question is asking if public employers are eligible for the SBA loans. So I think if we're talking the payroll protection program, that one is mostly for small business owners. So maybe if the question is, if I work for a public agency or entity, but I also own a small business, can I apply for that program because I am a public employee? And based on the guidance we have right now, the answer, there is no eligibility criteria for being a public employee. However, there is a portion on the application asking if you're a public employee of a certain level or higher. I know that public employees have a matrix they use for levels of employment. And I want to say it's 13. I can't remember what the exact level is, but I haven't had anybody check that box yet, but my guess is there might be some additional underwriting associated or additional questions asked if that box is checked. But couldn't say. I'd have to get back with an answer on what that looks like if that box is checked, because I haven't had one come through yet with that being applicable.
All right, awesome, thank you. We have had several questions coming through the chat, so I'll just go ahead and start reading these to you. The first is from Alicia, and she asks, is it better to use a calendar year 2019 for these calculations or a rolling calendar year, April of 19 to March of 20?
Yeah, so originally the SBA said that they were looking for 2019 numbers, so January 1st to December 31st, 2019. But they've kind of clarified a little bit, and they've just really focused on 12 months. So I guess the answer is kind of up to you. If the rolling 12 months is more applicable to your current employment situation, you're more than welcome to apply with that. But if the calendar year of 2019 is more applicable to your current employee situation, you're more than welcome to use that as well. Wonderful.
So the next question is from Isabel. Are we able to include retirement contributions in the payroll monthly average?
Yes. So it includes all compensation to employees. So it's not just specific payroll. It's also the retirement benefits and health insurance as well.
Right. So Jack is asking, is it all or nothing forgiveness for up to 100%, or can it be portioned? Some of it is forgiven and some of it is not.
So the guidance we've seen so far has not led us to believe that it is an all or nothing thing. It sounds like there is going to be portions that are forgivable, and if there is a portion that maybe was used incorrectly or whatever it might be, those specific funds would not be forgiven.
Okay. Michael asks, what if your business is still profitable, but loss of business has cut substantially and cannot be recovered after COVID?
Yeah, so, I would go back to what the main purpose of this program is. And the main purpose of this program is to get employees on the payroll and keep employees on the payroll. So I've had that question a lot from a lot of our customers who say, look, I'm still profitable, but we've had a substantial loss in business. And really, if that is affecting your employees and affecting the ability for you to keep employees on the payroll, you are absolutely eligible for the program, and I would definitely suggest applying for it.
Rebecca asks, can we pay our LOC payment from the CPP?
Yeah, the line of credit, right? Yeah, okay. Yeah, so, Yes, you can. If it's associated with an operating cost, you can.
Wonderful. Patty asks, is the economic injury loan forgivable?
No, there is no forgiveness associated with the EIDL program that we've heard so far. Again, things are moving quickly with the SBA. I'm sure those guys are working just as many hours as everybody else right now. So, but as of today, we have not seen any guidance suggesting any forgiveness associated with that program.
So Austin, question on the SBA business loan. Mm-hmm. How good are the terms that the SBA loan is offering on these loans compared to what is normally available in the business market? Yeah,
these loans are amazing. And again, I want to give a huge shout out to the SBA and to the current administration for allowing us to provide these to people. And I can get into this a little bit more. There's no collateral, no personal guarantees. The interest rate is 1%. This is an amazing loan program, and then you throw in the forgiveness on top of it. This is night and day from what we usually see. So I'm sure my management team is not going to be super keen on me after all of this blows over, bringing any more no collateral, no personal guarantee loans after everything gets said and done. This is entirely different from what banks have seen in the past. So.
And on the SBA loan, your typical commercial loan standard is a very short term, maybe 5 to 7 years. Mm-hmm. With a full, you might be amortized at 20, but you got to pay out at 5 or 7 years at significantly higher interest rates than what the SBA loan is.
Yeah. So currently typically a couple weeks ago even, SBA loans that you got from the SBA, they were typically at a higher interest rate, definitely not 1%. And there was a lot of, I would say the other thing that I would like to point out is, SBA loans are known for requiring a lot of information, and the applications that we've received and the amount of information we have to get from those who apply has been significantly reduced as a result of this program. I've had people telling me, especially with help from their payroll partners like auto paychecks, that it is the shortest loan application they've ever filled out, and it's probably going to be the shortest loan application you ever fill out, and it's going to be the best loan you ever get. So,
let me make a comment too on the. Yeah. The question we had about, I've really slowed down and I don't know, and basically I don't know what to do with my employees, so I've sent them home.
Right.
So one of the commitments that we made to our staff is that, and we did this back in 2009 when things really slowed down, is we kept everybody on board and we concentrated on upgrading our own staff by intensive training in-house.
Oh, wow.
So let me encourage you out there as business owners that with this opportunity, with this loan, with this bridge loan to help you keep your people on staff, you keep those families on staff, you keep the mortgages paid, and the kids have groceries in the fridge, and invest in personal improvement, professional improvement for your staff wherever possible. And at the end of this, when the economy starts coming back around, your business will be better positioned than it was coming in. We found that in 2009 when we did this. When we came out, when the economy started to come back around, we had positioned ourselves to really move forward in the market, and it turned out to be an excellent decision. So I would encourage you to keep your people working as much as possible and help to upgrade your own staff through training.
Thank you. We're going to get back to our questions here. We have Rachel, and she has asked, this loan is for W-2 employees payroll protection only, correct? Not K-1 payment to owners?
There has been some talk about the guaranteed payments, the K-1 guaranteed payments, and as of now from the guidance from the SBA, that also is applicable. You can use that. Now, there has been a separate timeline for when those types of businesses can apply. I believe that's April 10th. But guaranteed payments on the K-1 are an acceptable form of payment that you are able to apply for.
Excellent. Don asks, for PPP, is approval going to take a month or longer, or is it just for the money to hit your bank account? When will you know when you are approved for the loan?
So to give some guidelines, and this is going to vary by bank by bank. We're all working. Every bank in the Valley is working very hard to facilitate these loans. So I can't speak to the timelines of some of the other banks, but I can talk about what our expectations are for these timelines and with the people who applied with us. And we were able to get in over $70 million in loans approved this weekend with the SBA. Timberline has a great relationship with the SBA. We've been partners of theirs for a very long time. So we're actually able to use what's called our delegated authority to get these loans approved. And so essentially the bank is the one making the decision on behalf of the SBA. So really it's mostly a matter of getting it into their portal. And so as soon as we're able to get it into the portal, we're able to essentially get the loan approved. As far as the processing and the funding portion of things, we're still working through that process. We were really focused this weekend on getting as many people into that SBA portal as possible to reserve as much fund of those SBA funds for those that applied with us. And now we're just starting to get into the back end, the processing and the funding. We're thinking that we'll be able to see funding happen later this week, and or start to happen later this week, and we'll continue to work as hard and as fast as possible, because we do realize there's a lot of employees out there who need to get back on payroll and get those paychecks coming in.
Excellent. So Stephen asks, how do you count your FTE for part-time on-call? So that's only work when called employees.
Oh, that's a good question. I think you guys might be able to help with that a little bit.
Can you repeat that one more time?
How do you count FTE for part-time on-call to only when called employees?
So from my understanding of this is you're not counting FTE counts because it's just under 500 employees. So
yes, the qualification is based on the under 500 employees total.
Right.
The actual when you have to tell the SBA how many employees you have now.
Right.
So they can make sure that you didn't take this money and then go lay off a bunch of people. They want you to have at least that amount after. So the eligibility criteria is based on number of employees, and it is less than 500. The number you disclose to the SBA as to how many employees you have now is an FTE number.
Right. But it's as long as you're under 500.
Yes.
Because but the most of the measurement is based on wages and benefits, not on employee count.
Yes, absolutely.
Right.
Dana asks, what documentation do we need? Do you suggest us using a law firm, or is there no need?
If you want to use a law firm, I'm certainly not gonna tell you not to. But a lot of our customers have been able to work with their payroll partners and their accountants to facilitate all the information that's needed. Again, the SBA has done a great job of trying to reduce the amount of documentation that they require. And really, at the end of the day, this is boiling down to an application and supporting documents, whether those are Form 941s or payroll records, supporting the average payroll number that you came up with on your application. And there's more to it than that. There's a little bit more to it than that. But generally, those are really the core documents we're going to need to see when we're underwriting these loans.
Yeah, I'm going to say that the loan application, as Austin mentioned earlier, is incredibly simple. It is the simplest loan application I have ever seen, and it is download it. We'll also be sending out the loan app through Timberline after this. But if you have, I'm going to say for needing to bring in a labor attorney or an attorney for decision making here, there's other aspects of this. This week at Thursday at 10 a.m. we're going to be hosting Michael Santo here to talk about the management of all these special leaves and who can apply, and laying off people and furloughing people and the impacts of all those things. And if you have legal questions, I would encourage you to watch that or listen to that presentation, because the loan application is pretty simple. Is that, can you concur?
Yeah, exactly. Yeah, I mean, for the application itself, I don't think you would need to bring an attorney, but certainly for some of those other questions regarding what this whole thing looks like, I certainly definitely suggest attending that webinar and making sure you're getting those questions answered.
So Sarah was asking about the PPP as it pertains to sole proprietors and independent contractors. Mm-hmm. Can you review that a little bit?
Yeah, so based on the guidance we've received from the SBA, they are also eligible to apply. Now they've received a little bit later of a date that we're able to submit their applications. So applications for small businesses started last week, April 3rd. The ones for the sole proprietors and independent contractors is expected to open this week, this Friday, April 10th.
Becky asks, can you address the seasonal situation?
Yeah, so for people who are seasonal hirees and stuff like that who hire seasonally, they're also obviously going to have, if we take an average of all of 2019, that might be lower or might even be higher than what what is needed right now. And so what the SBA has done, and I'll send some more information out, is they are allowing seasonal companies to use, I believe it's February to June of 2019, to quantify their average payroll numbers. But I'll be sure to include that information when we send out information later today.
Wonderful. And I believe you've already covered this, but again, Kelly asks, can you apply for the PPP and the EIDL?
Yes, as long as the purposes are not overlapping.
Wonderful. John?
So can you give an example of that?
Yeah, so if you apply for the EIDL and you want to use those funds for payroll, and then you apply for the PPP and you list the same reason, obviously being payroll, what's going to happen is the SBA is going to require you to fold that existing economic injury disaster loan into your payroll protection program loan. And so that's something you'll want to keep in mind. I've had some customers and some clients reach out and say, well, look, I applied for this EIDL program the day it came out. I've already got the funds. Payroll was the reason I applied for it, but I didn't really realize this payroll protection program was going to come out. And I mean, I would much rather be a part of that. And the SBA understands that, and so what they've allowed is they've allowed us to make that determination and essentially fold your existing EIDL program loan into your payroll protection program loan so that you're still getting the benefits of that.
Could they then immediately pay off the emergency disaster?
EIDL, yeah.
The EIDL loan?
Yeah.
Because it's at a higher interest rate
Yes.
than the other one. So if you did apply for the EIDL at 3.75%,
right,
and then the PPP came out, you could get the PPP loan and then take those funds and eliminate the
EIDL loan.
EIDL loan.
Yep, exactly.
Okay.
Yep, essentially refinance it into the payroll protection.
So other question on this. So give us an example of how you gave some example of how you couldn't really use them. So could I say if I had equipment loans out, if I bought a new CNC machine, I had an equipment loan for my manufacturing facility, and I was going to have trouble making those payments, and I had payroll, could I ask for an EIDL loan or ED?
Yeah, no, that's okay. EIDL, yep.
EIDL loan.
Yep.
And a PPP loan.
Yep.
Using the EIDL loan to pay off my equipment, or to cushion that, and then I guess to pay it off really at a great interest rate, and then use the PPP to help cushion my employees' earnings.
The main purpose of the payroll protection program is payroll. The EIDL is a lot more broad, and you could use it for those purposes. Absolutely.
Okay.
Yeah. However, I would say, especially with the payroll protection program, one thing they have explicitly banned from doing is any sort of acquisitions, any purchases, or anything like that with those funds. Obviously, they don't want to see a business take that money and go use it to go buy a new building or fund an acquisition of another business or something like that.
But it's part of it was capital or capital payoffs of capital items. Is that right?
Mm-hmm. Yeah.
So can you clarify for our audience what the difference between paying off a piece of machinery is and acquiring a piece of real estate is? Are they looked at differently under the loan process?
As far as the loan forgiveness portion, we're still waiting on a lot of guidance from the SBA.
Okay.
They were really focusing on getting these applied for first.
Okay.
So a lot of the guidance we've received is mostly around the application process and not as much around the forgiveness process. We're still waiting for more information on that. But from what I've seen so far, and again, this is subject to change almost daily at this point, really it's going to be, was that equipment existing before all of this happened?
Okay,
or are you,
so that's key.
Right, exactly.
Okay.
Or are you going and buying new equipment and essentially using a loan with a 1% interest rate to do so?
Okay, all right.
So then, just to follow up on that, is the reason that you fold into it, and if you do fold the EIDL into the PPP, does that portion become forgivable under the PPP?
Yes, from what we've seen, the answer to that would be yes, yeah. As long as those funds are, again, used at least 75% for payroll and no more than 25% used for other costs.
And just a comment to our audience today is every day since this initially came out, there have been updates and minor changes to this. And I'm going to say we and our partners, 2 weeks ago we did a seminar with Michael Santo on a Monday, I think it was, and by Friday he emailed us and he said they've already changed the guidelines.
Yeah.
So bear with us on this. We're trying to give you the most up-to-date information, knowing that this is a moving target and we're trying to stay as much on top of it as possible.
Absolutely.
Okay, thank you. Austin, you're doing great with all of these questions, so thank you for taking them.
The hot seat.
Yes.
Yeah, here we go. It's getting warmer in here, that's for sure. I see a pretty long one that I'm waiting for.
Sally asks, our payroll expenses decreased significantly July of 2019, claiming a full year as payroll expenses completely overstates what our current payroll is. Is it possible not to use an entire year for the calculation and instead use only the first quarter of 2020?
So for new businesses, they have allowed you to use just the first quarter, really just January and February of 2020. So that I know that's an option for new businesses. My suggestion in that situation would be do the calculation based on the 12-month program. It's not an all or nothing deal. If you get approved for a certain loan amount and you only need less than that, you take whatever you need. You'll be eligible for a higher loan amount, but nobody's going to require you to take that full thing. So you can apply and be eligible for a loan amount based on 12 months of payroll, and then only accept the lower amount that you're going to need to pay your employees over the.
Well, and the other piece of this is a 1% loan. It's lower than the inflation rate.
Right.
So if you got the loan and it was more than what you needed,
right.
If things come back around quicker than we think they are, you can just pay it off.
Right. Yeah.
Or you can have a cushion.
Yeah.
At 1% to help your business be more survivable during
Absolutely.
a difficult time. So
yeah.
I wouldn't, if it was me, I would apply for whatever I thought I could qualify for.
Mm-hmm. Yeah.
Now, correct me if I'm wrong, you have to use it within 8 weeks for it to fall underneath the forgivable portion, correct?
Yes. So far that is the guidance we've received. That question is a very popular question, and one that's getting asked a lot is, I don't think I'm going to be able to use 75% of this for payroll. I don't think you guys want me to start paying massive bonuses with it either. What does that look like? And I would say, go back to John's point about, if it doesn't all end up getting used, keep in mind this is a loan at a 1% interest rate. So if there is, a balance at the end, you can just pay that off. However, there's no prepayment penalties, or you can, again, use it as a cushion. And honestly, we're getting more information every day, and I would not be surprised if that verbiage were going to change.
Okay. Dennis is asking, can any subcontractor labor costs be included in the calculation of the PPP?
I haven't heard anything about specifically to subcontractors, but I would say the goal of the program is to keep people employed, whether those are W-2s or subcontractors, whoever they are. John, do you have a little?
Yeah, I'm going to say that if you have subcontractors, they are their own employers.
Yeah.
And they need to be applying on their own as a self-employed person.
Yeah. This
is an employer loan for your own employees. So don't confuse the employment categories of a subcontractor and employee.
Okay. Yeah, and again, and for that, the sole proprietor or whatever it might be, that's going to open up this Friday.
Right, and those people should be. So if you have those people that you have a regular relationship with, I would encourage you to encourage them to apply on their own for assistance. But because they're not legally employees, they can't benefit from this through you.
So we have a question from Ellen. If you applied for the $10,000 advance, do you then start the actual SBA Form 5, and how do you do that?
So I think that $10,000 advance, that's that grant from the Economic Injury Disaster Loan Program. And, you know, with that being an application process directly through the SBA, we haven't been as privy to what those forms are and what that would look like. I would suggest for that, reaching out directly to the SBA for specific instructions for how to apply with that form regarding the Economic Injury and Disaster Loan Program.
Right. Lucas asks, is it better to wait until May 1st when it might get a little busier for some Colorado mountain towns?
You know, I wouldn't want to sway you either way. You know, it's certainly a pros and cons kind of balance act right now, because on one hand, I've had a lot of customers and clients in the same position who say, we're going to ramp up production, you know, down the road, and we'd like to wait if we can. And I certainly understand that. And if that's something you want to do, you're more than welcome to. I would caution, you know, we all saw the headlines this morning about how much of that money has been already allocated. So keep that in mind. If you want to wait, you're more than welcome to. But you know, watch that number, because it's been growing fast.
Yeah, the people that we've talked to expect the money to be gone.
Yeah.
To be completely drained.
Absolutely.
I mean, keep in mind, this is equivalent to 50% of the entire federal budget in one program. This is bigger than spending was in World War II.
Yeah.
Just for perspective.
Yeah, I mean, to put that in perspective, the SBA in total last year originated about $50 billion worth of loans. This program has been allocated $350 billion of loans. So I mean, almost 10 times what the SBA did all of last year, and they're trying to get this spent in you know, whatever amount of time until June 30th, and it's already, you know, there's already dents being made. So I would just keep that in the back of your mind if you're choosing to wait.
And the entire package, including the emergency leave package, is estimated at $2 trillion. So this is one piece of it, and then there's the emergency sick leave and the emergency FMLA, which there's also some employee support for, or employer support to offset the cost of these sick leaves, these emergency sick leaves. And the combined estimate currently is already $2 trillion.
Wow.
So this is just a small piece of the total support package.
Yeah.
Okay, so diving back into some questions here. From Deirdre, we have a question about, we are a C Corp, 49% owned by foreign silent limited shareholder. USA ownership is 51%. Does this preclude us from either program?
So I had I've had some companies who do have some outside ownership. Based on the guidance we've received, as long as the production and the actions of the business are domestic and the employees of the business are domestic, you are still eligible. Again, subject to change.
So just to be clear on that, it's expected that the funds are spent on U.S. employees,
right,
not foreign employees.
Right, exactly.
So
yeah.
if you have owners, because this, for a company that is, say, an S Corp in Colorado, mm-hmm, you can pay owner salaries as well as employee salaries with the PPP. Mm-hmm. If this was a company that had employees in Colorado but owners in Canada,
right,
you could fund the employees in Colorado but not the owners in Canada.
Absolutely. Yep.
Okay.
They want to make sure that I mean, obviously, right, you know, government's spending a lot of money on
right,
this. I'm sure the Canadian government has got plenty of resources.
They would love it if they would pump
yeah.
$1 billion into their economy. Right.
Absolutely, yeah.
I have a question from Miss Lynn, and she is at a nonprofit. She says, I have grants that cover a portion of my payroll. Can I only submit for the portion that is covered by general fundraising?
Yeah, I would say that's a good question. That's something we'd have to look into. But you know, I would say if there are grants already covering a portion of the payroll, I would suggest not using these monies to cover that portion.
Kelly asks, if employees have been laid off job attached, do we bring them back now?
Yes. So that's part of the payroll protection program. And again, we are going to include some information, but the SBA has suggested if you get approved for the loan, bring those employees back and get them back in.
And that would go back to my comment earlier. Even though you may be down on your actual work available, the whole point of this is to keep people employed, keep groceries in the fridge, keep their mortgages paid, so they're not defaulting on mortgage and car loans. So invest the time and invest in your people.
Yeah, huge development opportunity.
I mean, go after it. The government's basically giving you an opportunity to train your people.
Yeah. On
their bill. Well, it's actually all of our bill, but yeah, it's not really the government's bill. That's a different discussion.
So we have a question from Michael. Do you know how unemployment payments for business owners is going to work? A separate application?
I do not. I mean, I know there has been a substantial amount of monies dedicated to the unemployment resources for every state. I would definitely suggest following up with the state unemployment office on questions regarding unemployment.
Yeah, and it's our understanding that unemployment insurance, unemployment premiums and work comp premiums are not included in this. Yeah. As far as part of your employee expenses.
Exactly.
Right, so when you're filling out that application, you cannot roll in, we thought it was gonna roll in, but it does not, we thought it would come in under benefits, because it's an employer-paid insurance for the employee.
Right.
We thought it would fall in under benefits, but it's not.
Yeah.
So, but I think unemployment is gonna be very lenient on accepting unemployment claims from anybody that's laid off at this point.
Absolutely.
They are so buried, that they are not gonna really listen to a lot of dispute over why somebody was let go.
Okay. So we've got about 10 minutes more. We'll get through as many of the remaining questions as we can. Lainey asks, so on the total for the average monthly payroll amount on the application, do we add in utilities and lease payments?
Total average monthly payroll, do we add utilities and lease payments? No. So those are separate costs, not specifically related to payroll. If you've received one of our calculators, we do ask for that information, and there's a separate purpose as to why we ask for that. We want that to be documented somewhere so that when those funds, you receive the proceeds of the program, and you go and spend that on rent or utilities, we're able to show a well-documented history of those expenses and really match it up. So when the SBA comes and asks, Timberline Bank to make the determination of forgiveness for its customers, or for its applicants, we've got a well-documented history of what those utilities and rent payments were, and we can very easily show them that the proceeds of those funds were used for an eligible purpose.
But to be clear, in this PPP loan program, you can pay 25% of the total can be used towards those things.
Yes, you can use a portion of the loan proceeds for those things.
But they're not forgivable.
They're not forgivable, and those things specifically don't go into calculating your max loan amount that you're eligible for.
Yep.
Okay. Susan asks, we aren't a seasonal business, but the commissions our people earn, in addition to salary, will be less than what they earned last year due to COVID. Using last year's payroll figures, we'll overestimate what commissions will be earned until after COVID.
Okay. Yeah, and I would suggest that this goes almost exactly back to that original question we had earlier about the same thing, saying that we'll probably be eligible for more than we actually need. And going back to that, if you're eligible for it, you can take it and you can hold on to it and use keep it as some sort of financial cushion and keep some sort of liquidity within the business. Or to John's point, you can use that to pay your people, and you can train them, and you can use it for personal development.
Well, it's going to be used for wages.
Wages, yeah.
For wages during a time.
Wages, during this time, to pay your employees to take the training programs and all of that, absolutely.
Okay, so Gregory asks, can you talk about the $10,000 payment as part of the SBA Disaster Relief Program? Also on the SBA Disaster app, they don't ask for a loan amount requested. How will that happen?
Yeah, so with the EIDL program, they don't ask for a loan amount, and the reason for that is you work with a caseworker to help determine what the loan amount is. And again, because the bank is not part of that EIDL application process, we're limited on the knowledge we have of that process. But from what my conversations have been with the SBA, when you apply for that process, you, in tandem with an SBA caseworker, work together to come up with a loan amount for that.
Okay, I'm going to combine a question here. Gregory and Deirdre are asking, is Timberline accepting PPP applications for non-Timberline bank customers, and are customers taking a priority?
Yeah, so and I feel like that was possibly my, I keep saying customers, and really the reason I keep saying that is because anyone who is applying with us for this program, in my mind, becomes a customer, and so I've just been saying customers. So I apologize if that was a little confusing. We're accepting applications for anybody, and our focus is not getting our customers in there first. Our focus is getting as much of these funds that Congress has allotted to as many of the folks in Western Colorado as we can.
So are you just processing those applications first come, first served then?
Yep. If they're a complete application, they're gonna jump to the front of the line.
That's as fair as it can be.
Absolutely.
Okay, thank you. So Patty asks, I had new salaried staff on March 23rd, so do I have her payroll included? I don't have her payroll included in years past. Can I include it on the loan request?
Yeah, so that was a question I got from some other people whose businesses had experienced some growth in 2020 prior to this crisis. And originally the SBA said they wanted January 1st through 12/31/2019 numbers, but they have since relaxed that and said, we just want 12 months of payroll records. So again, if your payroll, if your current payroll situation is more aptly represented by payroll maybe from March 1st, 2019 to March 31st, 2020, feel free to use that period, as long as there's 12 months in there.
And just to be clear, the furthest you can reach back is January 1/19.
Yes. Yeah.
Okay, so Richard has a question. I'm going to reword it a little bit. Do you know what the different banking institutions, like how different their application process is, or is it all pretty streamlined, requiring the same documentation?
That's a tough one. I haven't had the opportunity to talk with many of the other banking partners in town about what their process looks like. I think we've all just been so focused on cultivating a strong process for each bank individually. But I would say that the certain portions of that process are going to be the same, especially the portion that in which you're applying to the SBA. As long as the bank is a preferred lender with the SBA, that specific portion of the process is going to look exactly the same. But as far as the rest of the process and timelines, I couldn't speak to that.
Okay, thank you. Diana asks, if I give my employee
So that would be like a reduction of hours. They go down to 32 hours a week from 40.
Yep.
Because business is just slow.
Yeah, whether it's that or whether it's decreasing hourly wage or rate, whatever it is, it can't decrease more than 25%.
But the point of this regulation or this
program,
this legislation, this program is not to decrease hours.
Exactly, right. Its focus is keeping employees paid,
right.
To speak to your point, to keep those car loans paid, to keep the house paid, to keep food in the refrigerator,
right.
Everything like that.
Toilet paper.
Toilet paper, yeah, that's expensive, man.
Sorry, the mouse.
Oh, the mouse.
Our internal chat popping up on the screen. Sorry about that. So another question, Dana wants to make sure that she has her ducks in a row. Are they required to submit a P&Ls or years prior federal tax returns?
No, we haven't been requesting that. Really, what we've been requesting is some sort of payroll records, whether that's Form 941. I've had some customers and clients use W-3s. Whatever that might be, I would suggest talking with your accountants or your payroll providers. They can certainly help with what that documentation looks for. But we're not requesting previous years of taxes or anything like that.
And let me comment to that. Tomorrow at 11:30, we're doing a webinar on how to get that information out of our system. But people who are not clients would be most payroll systems have similar reports that they generate. And if you'd like to attend that webinar, man, that invite just went out to our clients, is that correct?
Yes.
So we just sent that out to our clients, but if you'd like to attend that, please send an invite or send a request in and we'll include you on that. And you can see we didn't feel like we wanted to advertise during this time as far as how amazing our system is, but we could certainly show you what kind of reports we generate and how you pull that information out, because no matter who you're using for payroll, it's the same data that you have to get out of the system.
Yeah, and I think there is a good clarification that I would want to make. We've been heavily suggesting those who submit applications use some sort of federally submitted document, whether that's a Form 941 or W-3, whatever that might be. But that is not a requirement from the SBA. Again, we anticipated that if they wanted to go through and start auditing some of these, it'd be very easy for them to walk over to their friends across the hallway at the IRS and pull those documents. But as long as you have payroll records that support that, it does not have to be federally submitted documents. It's just heavily suggested.
And I'm going to say that virtually everything you need for these loan applications is on your quarterlies and on your quarterly and year-end reports. Mm-hmm. So you don't have to go into the weeds on your weekly or biweekly payroll reports. What you need for this is on your quarterly and year-ends.
Right.
All right, well, that is the hour.
Wow.
Thank you all for attending. Thank you for your wonderful questions, and thanks to Austin and Hannah for being here to present this amazing information. We'll do the best that we can to get the remainder of these questions answered and possibly also posted on our blog in a facts section, maybe a facts post, so FAQs. Is there anything else that we'd like to say?
Yeah, again, tomorrow at 11:30 we have, we're doing a webinar. It's particularly aimed at our clients, but any of you who are attending are welcome. On Thursday at 10 a.m., Michael Santo, who's going to be talking about the impacts to labor law on the rule for all these special leave rules, the emergency sick and the FMLA, and how to handle furloughs and layoffs and terminations. And then on the is Thursday the 14th? Tuesday the 14th. I'm sorry. So at 10 a.m. Tuesday the 14th, Chris West with our partner Dalby Wendland will be reviewing the tax consequences of this legislation and how to handle that on your taxes. So we are really grateful for you guys coming over. Hannah, do you want to say hi?
Hi, yeah, I do have something to add to the very end here. If you guys have apps out there, you have questions, feel free to shoot that over to our email address we set up. It's ppp@timberlinebank.com. We'll drop that in the comments and we'll post that on our side as well. So you can also head over to timberlinebank.com and we'll have that link on there. And feel free to reach out to us with any questions or anything you guys need. We're happy to help.
Is that it?
All right.
You were awfully quiet.
Thank you,
all
everybody.
for coming. That felt like it was about 15 minutes as fast as that went. So we appreciate it. The link for this talk will be posted on the recording will be on our blog, and you're welcome to go and visit it there. So thank you so much for being with us, and I'm sure we'll see you again later on this in the next week or two.